Interest rate decisions from the US Federal Reserve on Wednesday the 29th and the Bank of Japan and European Central Bank on the 30th will write a lot of their headlines from a macroeconomic point of view in the coming week. But even those announcements may be overshadowed if America's President Trump and China's President Xi meet to discuss trade and tariffs at the Asia-Pacific Economic Cooperation Summit that's due to take place on the 31st of October and the 1st of November in South Korea. And if that weren't enough, we also have a busy slate of scheduled corporate results and trading updates in the USA and over here in the UK and Europe. Big names to note stateside include Meta Platforms and Microsoft on the 29th and Apple and Amazon.com on the 30th. So many apologies that Amazon.com switched the date of its results after we'd recorded last week's video. Sorry about that. Now, meanwhile, mining giants Anglo American and Glencore will doubtless attract a lot of attention as they reveal production and cost updates for the third quarter on the 28th and 29th. However, we're going to focus on very quickly on three different FTSE 100 heavyweights, namely HSBC, Next, and Shell. HSBC will release its third quarter results on Tuesday the 28th. This release will be particularly timely after this month's wobble in banking stocks, which is, for the moment at least, putting a lid on a strong run for the sector that had taken HSBC to a new all-time high earlier this autumn. Now, as was the case with Barclays, Lloyds and NatWest's results in the week just gone, analysts and investors will focus on loan and deposit growth, net interest margin, operating costs, and loan impairment losses. As they get then, after they finish looking at the quantity of the third quarter profits, they'll also look at the quality, because this may give a feel for the outlook for the fourth quarter and beyond. Any comments from the bank about the economic outlook in China, the UK and USA will be welcome. And for the quarter just ended, though, analysts are looking for a headline pre-tax profit figure of $8.4 billion, broadly flat year on year. Attention will then switch to cash returns. In terms of the dividend, HSBC is thus far stuck to last year's script with first and second quarter dividends of 11 and 10 cents respectively. The bank paid out 10 cents in the third quarter last year, and analysts do expect 69 cents for 2025 as a whole, up from 66, so we may start to see some increments as the year draws this to a close. However, the bank won't be adding to its share buyback tally. HSBC announced a three-quarter pause when it unveiled its plan to buy out minority investors in Hong Kong's Hang Seng Bank for $13.6 billion early this month. That will leave the 2025 total for buybacks at $8 billion. Shares in omnichannel retailer Next trade at all-time highs as I sit here, despite the uncertain economic outlook here in the UK, and shareholders will doubtless be looking for more good news in this latest quarterly update for the third period of the year. The first half results back in September were unusual in that boss Lord Simon Wolfson did not raise guidance, as that's rather become customary of late. So the benchmark will be the expectations he laid out in July, namely full price sales growth for the year of 7.5%, which analysts think will translate into 5% total sales growth to £6.6 billion for the company, and pre-tax profit of £1.15 billion for the whole year to January 2026. And finally, we come to Shell. Its shares are actually not that far away from a record peak either, and that was reached earlier this year. And that's despite pretty soggy oil and gas prices. Now, those weak hydrocarbon prices could continue to weigh on profits and cash flow, though Shell is driving through an efficiency and cost-cutting program. An earlier trading update this month does flag reasonably good performance, however, in trading in oil and gas. And that trading activity could be a big source of support for the numbers. One benchmark for this third quarter report is the statutory pre-tax profit figure, where the base for comparison is $7.3 billion last year, earned between July and September. Shell's preferred profit metric, however, is adjusted EBITDA, or adjusted earnings before interest, taxes, depreciation, and amortization, where the benchmark is the $16 billion figure recorded in the third quarter, of 2024. Now, analysts will look at the performance of the individual divisions, the upstream oil and gas businesses, the downstream marketing and chemical and products businesses, and also renewables, and then they'll move on to the cash flow statement. Shell is keeping capital expenditure on a tight rein, and analysts expect 2025 to come in broadly flat on 2024 at around $20 billion. This matters because cash flow funds dividends and the share buyback program. Now, Shell paid out a dividend of 35.8 US cents in the first 2 quarters of this year, equivalent to around $2.1 billion a quarter, and it supplemented those payments with $6.8 billion in share buybacks. Management announced a $3.5 billion buyback for the third quarter, so analysts and shareholders will look for an update on the fourth. Assuming an unchanged run rate, Shell's on track to return around $22 billion to its investors this year, or around 10% of its current stock market capitalization, although fellow oil majors Total Energies and Aramco have actually moved to reduce cash returns to investors this year and cited weak hydrocarbon prices as a major reason why. Thank you for watching. I hope that you and your families are all keeping well, and I look forward to seeing you again next time.